With 60% of American consuming content through streaming services instead of cable, many entertainment companies want to increase viewership with subscription video on demand options. Investors will be watching whether the additional streaming choices will help Disney, Apple, or Netflix. So, let's take a look at all three. Disney could be a game changer with its $2 billion investment in its streaming division. Disney has a huge library. It plans to offer 500 movies and 7,500 episodes of a wide variety of series within a year. Disney has millions of fans of franchises like Star Wars, while classic Disney films like The Lion King will hold Disney loyalists. Right now, Disney Plus is a bargain compared with Netflix, with a monthly subscription fee of only $6.99. Additionally, Disney's third quarter earnings report improved by 33% year over year. This was the result of blockbusters like Avengers Endgame. So, let's take a quick look at the chart. And this is the 20-year monthly chart on the Walt Disney Company, and the symbol is DIS. For disclosure purposes, I do not hold any shares of Disney at this time. And since the bottom of 2009, it's had a very good run all the way up here, even including these corrections. And the recent close was 137.96. Now, it's definitely near all-time highs. So let's go down into the MAC. Here's the problem with Disney that I find. It had that previous top there. It did come down here and consolidated, and back up it went. Now we have a temporary high at that point in the fast line of the MAC, and there is still plenty of room for the stock heading up. But the problem that I have is once you see these kind of moves, not always, but often, and the probability is that it's near the upper end of that particular move. It was not here or even here, but this is a little bit more suspect than those previous highs. So right now, my sense for Disney is a hold, not a buy, but not a sell. Now, looking through here at the histogram, you can see that the move from the bottom here went all the way up to this point there. It's had a fairly steep decline. So this is sort of along the lines what I was talking about in the actual MACD itself. It's come down pretty far here, and this reflection right now is at a much weaker point than the peak. And I think it's just going to continue to erode after perhaps a temporary bounce. Here into the price rate of change, same sort of thing. The fast line has come through that slow line. It's coming back up to the slow line. However, I don't think it's going to exceed that line very much, and I think it's just going to continue then to head back down again. Relative strengths at a moderate 64.95, so it's losing steam, in my humble opinion. Same thing with the stochastics. Fast lines come through the slow line. It is reflecting back up here, but I just don't think that it has enough power to continue on for any length. Now, moving into volume, that looks fine. And then the Williams. Williams is moving back up to that oversold territory, but it was very weak in that whole time frame through this couple of years or so. So the strength of Disney is weakening. Back up to the price chart one more time. Again, in my opinion, this is a hold at best. Let's now take a look at Apple. Apple TV is free for a year for iPad and iPhone users with the newest devices. Their service is $4.99 a month for a family plan for customers who don't have the upgraded Apple devices. Apple TV is also much more affordable than Netflix Premium package, which costs $15.99 a month. That affordability will likely entice potential subscribers. Apple is spending on original programming from such stars as Oprah Winfrey and Jennifer Aniston. However, The number of shows offered is limited compared with Netflix. Apple TV has only 8 series and 1 movie available. In contrast, Netflix has about 1,500 hours of content that subscribers can binge on. Apple's fourth quarter earnings rose 2% to $64 billion on the strength of services like Apple Music. So, let's now go to the charts. And we're looking at the 20-year monthly chart on Apple, and the symbol is AAPL. For disclosure purposes, I do not hold any shares of Apple at this time. And looking at the price chart, you can see there in late 2018, early 2019, the bottom, and we rocketed back up here. We're at 260.14. Looking at the Mac, you can see here that we had the previous peak there, came down, had a nice consolidation, and then a slingshot on up. So the problem that I might have with Apple is this going to create a double top, at least in the Mac? Well, we'll have to wait and see on that one, but that's a possibility. So just keep that in mind. Looking at the histogram, you can see pretty much the same thing. That top there, that top here. Nice consolidation and slingshot back on up. Pretty much the same there in the price rate of change. Into the relative strength index, again, pretty much the same there, and is reflected as well in the stochastics with that bottom and a nice move all the way through there and back up. Those are recoveries you like to see, and Apple has had a succession of those that you can see in previous years. Each of those were nice consolidations and monster moves. So it's still on its way up in the current move. The volume looks fine, and then the Williams echoes pretty much what we've already talked about in the other oscillators. Back up to the price chart. We're definitely heading to record highs here. The question is how much higher? Well, based on those oscillators, I don't think the move is done yet. So again, Apple might be a hold. It's definitely not a sell. But if it's a buy, I'm not so sure. Again, I would probably just stick with Apple as a hold for now and wait to see what those oscillators do here in the near term. All right, let's go now take a look at Netflix. Netflix is investing $2 billion in new content through sales of bonds. Management hopes that by adding more programming, including some of Disney's own Marvel movies, they can maintain control of the video on demand space. Ultimately, Netflix investors will continue to benefit from the company's vast collection of content and its position as a premier streaming service. But in a recent surprise move, Citron, the noted short seller, has joined the chorus of bulls urging traders to go long Netflix. In January of this year, when shares of Netflix were trading above $300 per share, the short seller said investors buying into the streaming company at that level were blind. That opinion apparently changed as in its second quarter, Netflix added 500,000 subscribers in the US and 6.8 million international customers. So let's now go take a look at the chart for Netflix. And we're looking at the 20-year monthly chart on Netflix, and the symbol is NFLX, and I do not hold any shares of Netflix at this time. And what we see here is the previous high at that point, and this high here. It's important to note that this high did not get to that level there. But equally important is the consolidation there and here. They're more or less at the relative same point. Now, moving on down here into the Mac. Looking at the Mac, it's quite different. This was the first high, and this was the second high. So it is lower. So that lower high makes some sense. And the consolidation point, though, was right here versus the consolidation point right now. So this level here is well below there. So I like this in the sense that the fast line and slow line are coming down, and hopefully they're going to reset soon enough, hopefully above that zero line. Therefore, the subsequent move could be very powerful. Moving on down here into the histogram, again, the low there and then the low here, and it looks like it's trying to bottom. Not quite sure, maybe the initial stages of that. And you can see that here in the price rate of change with that move all the way down here, and this move is not as low. So there is an attempt at a bottoming process down here, but this is way down at negative 100. And that's interesting given that the MAC is still above zero. So moving here into the relative strength, that's at a very moderate 44.88. So things are very soft, and you can see that downtrend there. But the fact again that the MAC is still above that zero line is very interesting. Now also here into the stochastics, it looks like it wants to bottom in that area there, not unlike that area there. So once again, with that bottoming process occurring here and this near the 50 line, it makes it an interesting stock. Volume looks fine, and then the Williams pretty much the same as the other oscillators. Looks like it wants to try to bottom in this area here, not unlike that there. So going back up to the price chart, given once again that those levels here on the downside are about equidistant and still above that 50 EMA and only slightly below that 20 EMA, along with that MAC, both the fast line and the slow line, well above zero. That, to me, makes Netflix an interesting pick. So that would be my favorite. However, it's not done consolidating yet. That separation of the fast line and the slow line in the MAC tells me that this needs more time to base before it can consolidate and then gain the strength for an upward move. So keep your eye on Netflix. That's my pick of the three. And for today, that's ChewDog Charts. Thank you.